The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, folks. I'm not Steve Rhodes. I'm John Logan. I'm filling in for Steve Rhodes. He's a little bit under the weather. I hope he feels better. And Steve has laid the groundwork every day for some really good information. And I do a show at 8 o'clock right before him every day that kind of have a little bit different slant on some of the things we talk about. But I always look at Steve's show to try to pick up some extra things in the tool belt, so to speak, every day, because he's really, really spot on a lot of times. And, it's just invaluable information, in my opinion. So what we're doing today is we're just going to kind of do some follow-up on some of the things I talked about this morning. If you guys haven't watched my show, we pretty much have a market profile-oriented landscape that we look at on a day-to-day basis to try to do some analysis on some usual suspects of the commodities and currencies and futures world in general, indices, things like that. And then we get into a couple of stock situations based on our scanner. And it's a light week. I don't have to tell you guys that. So, I don't think it's probably not a bad idea to not put on some heavy positions towards the end of the year. Stock market, historically and statistically speaking, generally drifts up. Talked about that this morning towards the end of the year. And we took a look at some notes this morning. And we also looked at the S&Ps. I'm just going to do some follow-up to that, considering that the U.S. stock market is open and active at this stage, and that MO of the market drifting higher towards the end of the year seems to have just taken over again, just as the stock market has opened here. So I'm going to pull up the S&Ps. Here's the situation here, 2087. These are real-time quotes. Here's the weekly unfair highs that we talked about, 2071. We didn't even get close to there this morning. 2076 was the lows Monday morning. So, again, sitting above profile highs here, and that inflection point, 2071, 2072 rounded off, is going to have to be paid attention to for kind of stop-outs, if you will, on the long term if you're trying to be a little stingy there. There's really not a lot in the way here on the dailies, and I guess the thing that I would just impress upon everybody, which I've been talking about, there's a couple of things going on. One of them is it's kind of okay to be long, not okay to be short right now for quite a few reasons. And also, if you look at the scanner that we have on the TFNN site, if you've kind of taken a look at this, it's got two major parts to it. One of the ones I'm really focused on right now is our breadth indicator up top. And what that does for me, we kind of created this for our own purposes, really. I wanted to see in general, and we've kind of made this about as simple looking as possible with these meters up top. We call them the TAS speedometers. Is basically showing, the market as a whole in a very consolidated, summated way, whether the stocks on the weekly, daily, 240 and 60 down the line there are in an imbalanced area on the upside, on the downside, or in a kind of a balanced situation. So as we look at this, we can see very quickly that the breadth relative to profiles, the amount of stocks trading above profiles relative to the amount of stocks trading below profiles, is very imbalanced towards the upside, and therefore, looking at this on a historical basis, it updates every 60 seconds real time. Therefore, by doing the historical back testing that we've done with this information, it's not the greatest idea in the world to go against the grain here, if you will, when it comes to market breadth relative to our profiles that we automatically output. Now, as we kind of scroll down here and look at some of the usual suspects of the futures and commodities world, and we do have the chance for you now to choose different sectors of the world. Our show is called the Global Market Pulse, and we do deal with a lot of institutions globally, and this is some of the things that they want to see. We're always adding to this. We'll probably have 5,000 instruments up here in a relatively quick time frame. But you can choose different instruments, different sectors, and be able to kind of look at those sectors not only from a filtering standpoint, but also from a breadth standpoint. So I'm going to pull up the NASDAQ and see also that we're, as this thing updates here, we're relatively breadth positive. Got a little bit of negative connotations on the NASDAQ on the shorter term time frame. But, people are always asking, how do you use this? Well, if you're looking at long term, I'm going to go back to our S&Ps for a second here. If you're looking at long term, you probably want to focus on the weekly. If you're looking at intermediate term, you probably want to focus on the daily. But there's charts that we show every once in a while from our admin terminal of this that basically, do proof of concept, if you will, on, how this information has acted in the past and why this may be extremely valid moving forward, based on, when you create systems or look at scenarios, you always want to do back testing, in my opinion. And, a lot of folks will, if you've ever done back testing, there's a lot of programs out there that can do back testing and then optimize concepts and different variables and different features of those strategies that you may want to put together. And those optimizations, could possibly, have a hint of curve fitting. So they're basically doing what-if scenarios all along the lines and creating almost a false sense of security, in my opinion. What this is raw, only looking at the information that I spoke of in a backtesting sense. And for instance, on the weeklies, these have been right about 95% of the time. On the dailies, it's a little less, but it gives you a little bit of lead time on some things, a little bit of noisier situation. The weeklies are super, super powerful and important when it comes to this. So if I come up here and choose the S&P 500 as my core filtering set of instruments, I'm going to kind of show you what the score is here. As soon as this pops up, it's going to give me, and I'm just talking about the breadth here, trying to trade the S&Ps. It gives me all the 500 stocks in the S&P and lets me see on a relative scale. I'm just going to pull up Apple here, where we are relative to profiles on a long-term, intermediate-term, and shorter-term basis. And I'm going to look at this landscape view we've got here that you can pull up and see all the inflection points. This is where Apple's kind of lying right now here. We're right above daily profiles. We broke out above again. Got a new box attempting to appear on the 240s. That's kind of how you read this. You can look at all the inflection points in one quick glance. And again, this is something we created for ourselves, just to kind of hopefully cut down time frames to find things that may be of importance. So I'm going to go into our S&P 500. I'm going to go in here and I'm going to look at, since we're looking at these breadth situations, I'm going to go in here and I'm going to look at, let's look at stocks trading above profile. So we're going in here and we're above the box. I've got sorting only instruments that meet this criteria picked, and as it refreshes, it's going to show me the amount of stocks that are trading above profiles on our daily. And we're doing a little refresh here, so I'm going to have to wait for a second. Well, okay, as that refreshes, it's going to show just an enormous amount of stocks of the S&P 500 that are meeting the criteria. And I'm going to go in here and I'm going to choose the weekly just to narrow it down even more, and I'm going to choose the 240. So as that creates a grid here of filtering, quite a few stocks are extremely positive on the imbalanced area on the upside of the S&P 500. And you can find all these stocks and you keep drilling down more in different time frames. So I hear we have a caller. I'm just going to defer to Rich in Orlando. Are you there, Rich?
Yes. Good morning, John. How are you?
Good. I'm doing fine. How are you today?
I'm doing real well. Beautiful day here in Florida.
It's not here in North Carolina. It's rainy, cold, and
no, I'm sorry. I guess that's why I'm down here in Florida.
That's a good thing. So what's on your mind, Rich?
Well, I was wondering, if we're looking at the market kind of getting to a point here of being tapped out, is there your ideas or your feelings on the ERY versus the FAZ? It would be the three-time ETF for the financials versus the energy stock.
Okay.
If you were to take a position in one versus the other, I mean go ahead.
Oh, yeah. Okay. So the ERY is the daily energy bear
Correct.
sector. Okay. And what was the other instrument that you
The
just
other
spoke
one was
of?
the Frank Apple Zebra, FAZ.
FAZ.
That would,
Okay.
That would be the financials, the same, short position on the financials.
Okay. So I'm going to, can I look at these separately? Is that?
Absolutely.
Okay. So the FAZ, again, this has been something, I don't know if you can see my charts here. It's probably a little bit of delay because of the radio TV situation.
Okay, I am watching on the computer. I can see what you're talking about.
Okay, real time then. Okay, so FAZ, the Daily Financial Bear 3 times section here is, it's, I mean, the long term, the way if you watch my morning show, I don't know if you have, we always talk about, what's the prevailing trend on the long term, and then try to maybe utilize some shorter term time frames, in this instance the dailies, the 240s, to try to regulate that trade in our favor towards the long term trend and try to be able to pick battles based around those scenarios. So as I'm looking at FAZ, and the thing you got to remember, Rich, I mean, somebody told me this a long time ago, and I've always tried to just keep it in my mind. Nothing's on sale and nothing's too high, because things on their highs go higher and things on their lows go lower. It's just the way you've got to look at things as a trader, in my opinion, based on kind of being able to go to work and turn the rents the same way and do it the same way until we're told differently. So that being said, the major inflection point that really will even start a hint of causing any technical damage, I'm going to focus on the weekly here on FAZ. If you'll notice, 2 weeks ago, we're in a defined downtrend, and it's kind of okay to be short and not okay to be long. That's, in my opinion, at this stage, you want to continue to almost pass on the longs and go with the shorts. 2 weeks ago, we reached a high of 1467, and those unfair highs on our weekly profile were 1481. So we got within 14 cents of an inflection point that we could pay attention to use as leverage on the short side there. Now, initially the target's down below 1310. We closed below. We haven't even gone back and retested. We just have just drifted below profiles again. So if you're going to continue to turn the rents the same way, so to speak, let's drill down into the daily here and see that we've got a new box that appeared today. And Rich, if you can hang on, I hear we have to go to break here for a little bit, but if you can hang on, that'd be really cool. And we can pick this back up on the analysis of both of these when we get back on the air here.
Good enough.
Great. Come back to see us, folks. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Steve Rhodes has had a little bit of a situation he had to take care of today. I'm John Logan, filling in for Steve Rhodes. And Rich, are you still on the line?
I am. Yes, I am. Thanks, John.
Good. Thanks for staying with us. Here's FAZ on the daily, that 1244 area sitting there. And I know, I've thrown out a lot of inflection points, those weekly unfair lows and the daily unfair lows. But again, I'm kind of a stingy trader. I don't like to give back too much ground, and I probably take more small losses than maybe some of the folks out there, because I just think it's always okay to lose a little, make a lot. And this has been a trend that's, if you kind of played that game on the weeklies and then used the dailies to regulate it, you've only had a couple of disturbing areas basically since around the 17, if you look at it, namely back in there. So right now, I would, in the FAZ situation, I would just orient stops, again, staying with the trend and kind of turning the rents the same way until we're told differently in any technically damaging area like we did above that 1380, 85 area up there. I would just orient stops above 1240 and just kind of let this thing fall apart. I mean, it's, I don't see any other way to trade it if you want my opinion.
Okay, but if you're saying the bottom line would be 1244 on the bottom. I mean, if it went below that, then I'm currently in the position.
The short, you're short.
I'm short the financials. Yeah, I thought that would look like we had a lot of distribution going on, in the in the underlying stocks there. Now, today, unfortunately, a number of them seem like they have kind of broken through new tops. Doesn't seem like there's much volume out there, but I'm a little. Like I said, so it's a question in my mind whether it's like, wait a minute, am I fighting the trend here on the FAZ, maybe the ERY, which would be the energy, but the energy is already taking a big hit. But it looks like it's more in a downward spiral. I was trying to catch the oversold at the top, but it doesn't look like. I'm not sure on that. That's where my.
I'm strictly speaking about this instrument alone, FAZ. Okay. I think this thing could continue to go down, and that, I guess, means that the financials would continue to rise. Is that fair to say?
Correct.
There?
Correct. Yeah. That would be true. Yeah.
Yeah. So again, Rich, I don't want to be the bearer of bad news or anything,
that's
but
okay. That's what I'm calling about. What do you think about with the ERY then, and on the other side of it?
Yeah. Let me look at that for you. ERY. This is something. I'm still bearish on crude. I'm not extremely bearish like I was around the 100 area, but that's kind of $45 ago. Here's the situation on the ERY. Like 2056 is going to be kind of the Maginot line for me on this. I like the way this thing's kind of just heading south here and consolidating. This kind of Maginot line here at 2056 is going to be kind of where I would say uncle above there. If this is, the course of action that this is going to take to continue to head lower.
Well, I guess this is fine. This would be a short position in the oil, so this would be looking for oils to go down lower. So we would look for this to rise.
Okay.
Yeah, right.
Okay. That being said, and I don't look at these ETFs like this a lot that are the opposite situations. I would not look to go long this until we cross the border above 2056 and had a close above there.
Okay.
If that makes sense, because that would coincide with what you're saying about oil, or what I'm saying about oil falling.
We'd be looking for this to rise. In both cases, we'd actually be looking for them to rise, not drop.
Correct. Correct. So if oil does what I'm thinking it's going to do, which is get below 55 and maybe do another leg down, this would be a buying opportunity above 2056. But I wouldn't mess around with it until that happened.
Okay.
Okay. And that's my take on it. I don't look at these opposite ETFs a lot, but thanks for bringing this up. And again, I'm just with the financial situation and the oil situation. I'm just looking at the long-term trends here. And, turning the rents the same way until we're technically damaged the other way. And I don't think we're remotely technically damaged on either one of those products yet.
Okay.
Okay.
I appreciate that. Thank you so much.
You're welcome. Thanks for calling. Yep. Thank you. Thanks for hanging around today. I know it's a light week, and I appreciate the phone call.
Thank you. Bye-bye now.
Yeah. Okay, guys, we've got to go to another break here in about 10 seconds. And when we come back, we're more than likely going to bring on one of my partners out of Europe, and we're going to talk a little bit about the Russia situation. As we always do with him, I call him the Oracle of Moscow, so he'll be with us in just a bit, and we'll get a take on some of the things going on over there and some of the instruments that are being affected by that situation. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Steve Rhodes is off right now, and I'm John Logan filling in for Steve Rhodes. We have a chart up called the 10-year Treasury note, and I was hoping that we could get my partner out of Europe, Edmundus Katinas, on the phone. Is he with us?
Good morning, John. Good morning, listeners. Good morning, everybody. Yes, I'm here. What's on your mind, John? Thanks for having me here again.
Well, actually, what's on my mind is hopefully what's on your mind, which is I wanted to talk specifically, I've got the 10-year up right now. I want to talk to you about two things. One of them is the situation with the relationship between the S&Ps and the U.S. Treasuries, and how, you and I have basically talked about opting out on shorts on these things until we're told differently, technically speaking. Here's the long term on the weekly. I'm just going to kind of throw some things up here. That's the daily we're showing now, but the weekly should pop up here in a second. Talked a little bit about this on the morning show this morning. Here's the weekly, and we talked about, these profiles keep edging up. I mean, higher lows and higher highs, and that relationship between the S&Ps and Treasuries really has had the massive disconnect, historically speaking. Where do you think these Treasuries are going relative to the market making new highs and the Treasuries seemingly just, edging higher at the same time, basically?
Last week I was on your show. You asked me to give some comments and we came to not orchestrate it, not preset the conversation about where S&P is going. And when I told that S&P is kind of, I'm neutral on it, and you kind of, you don't want to escalate that conversation because everybody probably been bullish. You've been bullish in prior year assessments,
right,
which has been right, of course. Technically, S&P is still bullish. All economy is still okay, running up, and probably going to run out of the steam in the seasonality. Christmas rally and all that stuff, which is a high percentage of seasonality. That December and January we kind of still have some. But why I was neutral in S&P because the price was way above some certain levels of our boxes, our profiles, and still, of course, were no reason to go bearish or any other kind, but bullish. Why I was neutral? Because it was a flat formation of S&P, flat formation on daily. That means flat resistances. It was obvious to the chart or tape readers, to the whole entire world, and it's not we just broke out recent resistance, which was 2075, and it held up there for it's a clean, I don't like it. It's old news to me. No new information on the too far away from balances to profiles, or below profiles, or left below, and there's nothing there to do technically. Just sit probably and painfully watch when the thing is going higher, inching higher. But since we talked, since you asked me what the situation of S&P was, and I was neutral on it, it was at the 2075, and you can see nothing has changed. So my neutral stance probably stays there. I would not go short. So going back to your to the interest rates.
Right.
Technically, a little bit, as you said, disconnected is obvious, but probably some correction in the market, which we do not see neither technically or fundamentally. It's probably on its way, and that's why we probably have the disconnection and turmoil and oil, repricing the oil, but yeah, again, this is, as you said, inching. Our profiles are inching higher and higher. Long term,
right.
Short term, we'll kind of have a neutral, a little bit noisier. Profile is getting broken. The same profile, it's from December on daily bar chart. It's from December, I think, 4th, and it has been played above profile, below profile, above profile, and then now it's below profile. The indication of the market being on a short term on this particular scale, market being non-directional and choppy. So only thing we can technically trade applying our tools, get out of the chop, out of this time frame into the weeklies, into the fast time frame, and try to trade that fast time frame. Therefore, I also agree that we should be looking on weekly bar chart recommendation from our profiles distribution. Think is inching higher. It's a very low risk. It's all about risk, right, and probabilities. Very low risk play unless it's not below 125.14, 125.14. Unless it's not below, it's a long play opportunity because profiles are inching higher. That distribution between buyers and sellers are shifting higher, and the price is near 125.14 is a stop for the longs for this particular. That would be my take for that.
So to summarize what you just said, I was a little more bullish than it's great to have different opinions when you've got kind of sounding boards as a trader to try to stop yourself from getting too convicted on one side or the other. And Eddie was a little more non-directional on the S&Ps. I was a little more bullish, and it happened to work out that they floated slightly higher. Nothing to sneeze at really, but I think the good news is that when we were looking at that, it was still not okay to be short yet for Eddie based on the profiles that we were looking at, and basically that's the same conclusion I came to. It's not okay to be short. So we haven't had any indications on the index itself, on the S&Ps, to really kind of lay into any short fashion. So therefore, you eliminate one side of the marketplace, which is what Eddie did also. And on the notes here, basically that's kind of what we've also come to the conclusions to, that since the long-term profiles are edging higher and you've got some chop here on the dailies, I'm always looking for long opportunities on the treasuries based on that trend up, as Eddie just stated was the case. Now, Eddie, I want to switch gears just a little bit here. We talk a lot. I mean, we do business for guys that don't watch our morning show. We do a lot of business in Russia. That's been a little different lately, to say the least, because there's so much turmoil over there. But I've got the ruble up right now. We don't have to necessarily talk specifically about the ruble, but if you could give us a little bit of the mindset of what's going on in the financial community in Russia, because I know you spent 3 hours on the phone with some folks out of Moscow this morning.
Let's talk about some funny things, and
Sure.
That's why it was a reason I was not very inclined to deal with S&P, because there are much more volatility in some other regions, or like in emerging market currencies, like in Russian currency, in forex markets, much more opportunities, I would say. So I've been talking today. You remember this guy a long time ago? He was a good acquaintance for us. It's Nikolai Demchenko, and he's second in command of the mayor. He is a deputy of mayor of city Monino. It's located next to Moscow, and 60 kilometers from the center of the Moscow, which is anything which comes closer to the 100 kilometers of the city of the center of the Moscow, considered to be inside of Moscow. So he's a big guy. He knows the insides, and So I talked to him as you said. We spent lots of time on the weekend, and we talked like today, a couple hours. So he says, if they will not come up with that means Central Bank of Russia, they'll come up with some kind of regional type of exclusive or government support banking, financing venues, there is no money. We just say, hey, long money is expensive, and that's what you kind of can expect. The market will slow down or get some recession. He says, look, there is no money at all, not even long or expensive or unexpensive. There is no money, period. So the situation is not that good, but that's to add up to the volatility of the emerging markets. And that just gets spilled over to the, say, Johnny, pulled out if you might say dollar Turkish lira. I think TRY. It might be.
It's going to take me a while to put that together.
Whatever. Yeah. So but your listeners probably will pull out this same opportunities. If you overlay the charts, ruble dollar and euro dollar or Turkish lira dollar, you would see the same reaction, even more opportunities probably. It was because it was going under the radar, And Turkish is much more weaker country, rather not supported with natural resources as Russia does. And Russia has I think, better, faster chances of slower, actually, the volatility will slow down with the Russian ruble forex pair rather than dollar Turkish lira.
Okay. I've actually got it up right now. I don't know how I happened to get the right symbol on this, but here's the TRY USD. We're trading about 2.31. Is that kind of what you're? Okay.
Yes.
Okay.
Yes. Yeah.
And here's the daily long term. So So here's the Turkish lira. I don't know if a lot of people are trading this cross, but keep going. Keep going.
Hey, this is sweet. Your listeners or viewers, you can see that the 2.19, 219.48. It was 3 rebounds, retracements into the hour profile highs. That's clear, nice. It's a gift. It's it's sweet stuff, and and as you can see, it's not actually retracing that much from the highs as the ruble does, because it does not have that attractive interest rates. Comparing it to ruble central bank decision right here. So there are some opportunities, people, and this forex pair, it's actually liquid as well, so it's not like a spread.
Yeah, I want to point out something here after you said this. We had a profile appear below price action, relatively far below, and that's very bullish in itself. And as you can see, we're basing above there. And this, like Eddie said, this is a kind of a really decent opportunity if you've never looked at it. I want to go back to the ruble. This is something we talked about on the show this morning. We've got a new profile, thank goodness, that's appeared here on the ruble. And guess what? This 53.96 We're sitting here. This is our long-term support now, 53.97. Let's just call it 54. And guess what? I'm just going to, I know you're on a little bit of delay there. Let me just go back to that, 54. And then we've got the kind of a DMZ that's been created between 54 and 55. So we're sitting right now. We've reached some targets above at around 58. And do you think, because, before this 58 area was, we had that 2,700 pip move up in 24 hours a week or two ago. And then we came back down and we caught some 200, 300, actually 700 pip moves off of this 58 area, broke through it. Now we're kind of coming back up, former support, now resistance. That was a great target that we reached today already, and that was at 58.16. So we almost met that to the tick. What do we do now with the ruble?
I hear your analysis in your own show an hour ago about ruble, and I agree with you. You kind of don't want to get short on it, and just you're looking opportunity to buy. That means buy dollar, sell a ruble, which I would agree with you on longer term. However, shorter term players and Forex. Somebody told me that Forex is always short term play opportunities. So nobody wants to get invested in that. So I would say, yeah, John, considering the fundamentals, interest rates are 17.5. It's, Russia, a Russian central bank, pours into the intervention consistently, quietly, $17 billion a week. They're sitting on it. Plus, you have exporters, Russian exporters, which have to square the books and file their taxes, and they need a ruble as well. So because they made lots of money on that too, Russians that are panicked, little guys, they need to go buy their normal, typical, stuff, whatever they do every day, and they're sitting on the dollars and stores. They're not accepting rubles, euros or dollars. They're accepting rubles only. So, considering the interest rates, considering the international interest into those interest rates, considering the stabilizing the oil, considering the Russian intervention, quietly 17 billion a week, I think we can easily play technically and fundamentally. We can take the trades both ways. Giving the factor of the volatility that our profiles will be a little bit probably overshooted, like it has been overshooted 55 area, 55.30, 54.70, those profiles, recent profiles. So I believe that we have to give a factor of opportunity and trade both ways this thing, fundamental, technically, in my opinion. Right.
I hear you. So I've been kind of preaching, it's probably not a great idea to short this particular pair right here. And Eddie is saying now that, we're probably going to be in a little bit of a balance range here. But again, the inflection points to pay attention to, which are actually on our scanner, are 55.30 and up top 58 even approximately. And so I think support can be bought at 55.30, and then breakouts above 58 is basically, I think, what the page that both of us are on right now with this product. Eddie, if you can hang around, we got 5 more minutes before I think the next host takes over, and we will take a short 4-minute break on commercials, and we'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Hi guys, welcome back to the Trader's Edge. I'm John Logan, filling in for Steve Rhodes today. Eddie, are you still with us? Okay, Eddie's dropped off, I believe. We're taking a look at the British pound. This is the 155.91.
No, Johnny, didn't drop off. I'm here, man.
Okay. The 155.91 on the British pound unfair lows came back and touched that this morning, reached a high of 155.86, so 5 ticks off of there. What's your thought on the pound? Is this got a chance of reversing, or is this something you just kind of stick with? Things on their lows go lower.
As far as currencies, everybody probably would agree with me, every currency trader, it's about inflationary or non-inflationary. If anything goes up against the dollar, it's a pound that goes first because it has some, interest rate opportunities. So this is, as you can see, still gift on short-term basis every day, every bounce up into 155.90s areas, into 155.91 areas, into the lower end of distribution. of our profile on daily basis. It's a gift for you. The closer it comes, the less risk you bear to short this market. Unless new profile will appear, we still will be selling rallies technically, and of course this currency would be the first to bounce up if actually when time comes to it.
Yeah, I agree fully with that, and I think we're on the same page there. Let's take a look at the yen, because this is something, where does the madness end on this? You've got a Japanese central bank or Bank of Japan that's kind of been pushing the buttons here, and we're like 2,000 pips into this since we called the 101.33 bottom to be bought, and that took a while for that to develop. Where do you think this thing ends?
I would say there is another candidate from the currencies to go long on
support
on support. Yeah. I think euro is a better candidate. But this thing, of course, does not have a break. I think I'm looking at the channels right now and the witnesses of our distributions. Mm-hmm. If you add two distributions above the current price, we will end up in 140 area. So two standard deviations of the distribution between 118 and 120. So we have 6 basis points up from 121. So it's another way we're measuring targets, right? So you add standard deviations of the distribution on top of each other. And 128, this is first target for euro, for dollar yen, and 140 in the long term, I think, and madness. This is a good trading opportunity. And you called that, Johnny, right? Our software called it very, very correctly. Not only that, but I believe so. Euro yen, it has a bigger potential.
Gotcha. Yeah, I mean, it's amazing that these things have had the runs they've had, but these are the types of trades, you make your whole year on getting behind a trade that you've got the benefit of a central bank or central government or whatever you want to call it standing behind a policy that they're not stepping off the gas pedal on. We got about 20 seconds. Here's the euro. This is kind of the gift that keeps on giving. Last inflection points, Eddie, on the euro are 122.05.06 sitting down here. That's going to kind of be a little bit of a stingy stop area, if you will, for this thing to keep falling apart. It's like crude oil. It just kind of drifts lower, and it's not a lot standing in the way. Thanks for coming on today, Eddie. This has been John Logan for Steve Rhodes, and we've got the Tiger Technicians Hour coming up next with Basil Chapman. Hang around for that. He is just unbelievable. I listen to him every day. Thanks, guys. We'll pick it back up again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.